In this video, we will discuss technical analysis. Technical analysis is a discipline and an art where traders use price trends seen on charts and data to form an objective bias in the market. Technical analysis is the process of interpreting the message of the market from charts and data. We will mainly use technical analysis to identify when our edge is present. The goal of this module is to teach you the basic building blocks of technical analysis. It will show you how to read price charts and to interpret what you see in order to form a bias on what direction the market is most likely to go in. Let's jump into it. So now we're covering an introduction to technical analysis. This entire module will be about technical analysis. This is one of the longest modules in the course because we are, as CPTs, technical analysts, and technical analysis is very important. We will use technical analysis on a daily basis to make profits in the market. And we will have to become very familiar, very intimate with the charts as technical analysts. The charts communicate to us data. It communicates what's happening in the market. And we will use the charts to follow the flow of money and be able to forecast the likely future price movements. And that's how we make money, right? From price movements as speculators. So the value of technical analysis is not to predict every move, but to make sense of the moves in order to anticipate what is highly likely to come next. So this is what we're looking at is US 30, the top 30 companies. And this is called a line chart. We're going to get into the charts in detail in a minute, but this may look chaotic. It may look like there's no structure or no form to what you see. But in fact, there's structure here. There are patterns here. There are cycles here that we will discuss so that you can interpret what you're seeing and make money in the markets. What I'm showing you next here is the same chart with what are called the Japanese candlesticks. The Japanese candlesticks were invented to capture what is happening, the forces of supply and demand, by using candlesticks. We're going to dive deep into this, and this is one of the most important topics and concepts for you to master using our edge. So we'll get into this. And by the end of this video, I'm going to share with you the top 2 trading platforms that you'll have to, or that you can use. You don't have to, but that you can use in order to do technical analysis. But let's first just talk a little bit about what we'll cover in this module. And if this is your first time, if you're a beginner and you never heard of some of these, it's okay. Just I'm making you aware of what's coming. So we're going to talk about the 4 phases of the market. If I look at this, having the 4 phases of the market in mind, I'm able to chart out which phase certain parts of the market is in, and that will determine how I will participate in the market. If the market is going down, that's a particular phase. If the market is moving sideways, that's a particular phase. If the market is moving up, that's a particular phase. So knowing the 4 phases of the market is very important because it will help us contextualize which of our strategies we should be trading and why, once we know the context. And then market structure and trends. We will discuss market structure and trends. So as I mentioned, when you look at this chart, it may seem chaotic. There's a bunch of movements up and down and sideways, but it's through market structure and trends at a high level. If we understand those things, we'll be able to put some structure to what looks chaotic. We'll be able to understand the trends that we see in the patterns in the market and be able to understand when our edge is present. Another thing that we'll discuss is called support and resistance. We'll discuss, as I mentioned, Japanese candlesticks. When we zoom into what is happening in a short time frame, at a short amount of time, we'll zoom in using the candlestick patterns, the Japanese candlesticks, to see what is happening at a given moment in time, right? If the market is opening, we'll look at the candles in order to find out if our bias for a certain direction is likely to play out. If we think that the market will go up because of what we've analyzed, the candlesticks will give us another level of understanding, another level of real-time analysis. It'll give us data in real time by looking at the candle, and the candle will be moving during when the market is open, and we'll discuss that as well. And another thing is supply and demand zones. So when we get to this level, supply and demand zones are more of an intermediate topic, but we'll build you up to that level. And once you study supply and demand zones and can identify them, your trading will be solid. You'll be on another level when it comes to knowledge. Now, performance and execution is still something that we'll have to practice, but supply and demand zones are critical for our edge, and they will give you a great advantage in the market. Also, we'll discuss volume, the importance of volume. We'll get into that as well. So how to succeed as a technical analyst. There's a few things I want to just talk about here for a minute. To be successful long-term, you have to preserve your money during times of uncertainty. So when we look at this chart, okay, when you see this, if there's something you don't understand when you're looking at the chart, that's the time to stay out. As an analyst, if there's something that's unclear, if you can't identify your edge, you want to stay out of the market at that time. So you want to keep your money ready to deploy when the market presents conditions that favor your edge. That's what we want to do, right? We want to have our money ready. We want to have our capital ready for those times. And when the market exposes our edge, that's when we want to shoot, right? Another thing that I want to mention is that to be consistently profitable, to make consistent trading profits, you only need a few solid strategies, right? To pass the funded challenges, to pass and get a funded account and get profit splits. You only need a few solid strategies that you master. Many people, many traders have way too many strategies. They become confused, they mix them up, and they think that they can apply strategies in any context. But you'll learn later on that all strategies don't work in every context, okay? So keep your money on the side and ready to deploy when things are clear, when times are clear, and focus on mastering a few strategies that you've validated that have edge. So one other thing that's extremely important is we want to swim with the big fish. So the purpose of technical analysis isn't just to memorize patterns, right? So people memorize double tops and triple tops and double bottoms and heads and shoulders and pennants randomly in the market. But that's not the purpose of a technical analyst. The technical analysis is to help us understand the motivations of the large participants so that we can try to anticipate their next move based on some historical data, okay? So that's what, when we open up the chart, we have to ask ourselves, where are the big boys going? Where are the big institutions going? Where are the banks trading? Where are the massive institutions? Where are they taking the market? And that's what we should be looking for. We can use our patterns. We will use supply and demand zones. We will use volume and things like that. But our sole purpose is to understand, to anticipate the motivations of the large participants. And they will reveal themselves amongst what looks like chaos. And once they do, we want to go with them. So if you look at US 30 recently, there were 46 days of going up. We will trade with the trend, with our edge. We will trade with the institutions. If they are rallying the market, we will deploy our rally strategies. We will not try to anticipate the sell. Many people were anticipating a sell here, jumping in, and took a loss. Many people tried to time the sells in different places, and the market just blasted through those areas where people were trying to time the sell. The reason why is because of FOMO. People get FOMO. They have a fear of missing out. So they think they're going to miss out on a big drop. But we will learn through our strategy, when you understand the 4 phases of the market, when the market is going to go into a bear decline, it will give us signs. And once it gives us signs, that's when we want to participate in the sell. So swim with the big fish. Always remember that. I passed the MFF challenge a few weeks ago by just trading buys here with US 30, going with the big boys. Now, another thing is that the market, it discounts the past. Okay. So what happens is sometimes people want to wait for news to come out and then react. But the fact is that we need to actually be ahead of the news. Most of the time, news is printed after the fact. And they say the market did X because of some news. In reality, the market happens and then the news comes out. So you'll miss it. You'll miss the moves if you're waiting on the news to come out. So, but sometimes we wait on news, but the price action in the chart, the momentum, the volume in the chart, most times will give us the big picture. You look at 34 days of going up here, it went down, and then 46 days of going up here. The way that we can buy here is similar to the way that we'll buy here. Okay. So we'll use past patterns, the market phases that we understand in order to anticipate the likelihood of direction. Now, another thing is price moves in trends and cycles. So we will focus on the identification of trends and cycles. And once we can identify them, we will participate. If you look at US 30 here, look at these V's that I drew. We were in a certain phase, and there another phase, and then went into a different phase. We were entered into a phase, went into that same phase as is over here, and went into the same phase that we were in over there. If you understand the phases and can identify the cycles, this gives you a tremendous edge. And this is how I trade US 30, understanding these cycles so that I can understand if I need to be selling and then when I need to stop and start buying. Okay. So this is what we'll do in the course. And then another thing that we want to remember, though, that is harder for the beginner trader. It was hard for me in the beginning, is we hear that history repeats itself. The market repeats itself. And one technical analyst, multi-million-dollar technical analyst, quoted Mark Twain saying that history rhymes. So the same exact pattern doesn't necessarily appear, the same exact pattern, but there's certain principles and certain similarities that if we understand certain principles, then we will be able to trade certain trades that are similar, but not exact, right? So for example, this rally here, it's similar to the rally here, but it's not exact. So there's certain patterns and principles that we need to understand, and understanding those principles are what will help us be successful. So that's what we'll do in this course. I'm going to teach you the principles. Now, the tools for technical analysis. First off, there are two technical tools. There's many more out there, but there are two primary tools that I use and that we'll use in the course. One is TradingView. It has advanced charting. I love drawing in TradingView. It's very advanced. The UI is very professional and very modern. There are many things that you can do, a lot of shortcuts that you can create in TradingView. And I have a whole walkthrough of TradingView in the course. And then the other one is MetaTrader 5. This is where I place my trades. I use my trade manager here. I have EAs, which are called expert advisors. There are certain things that you can use programming to do to help you trade better. And that's why I use MetaTrader 5, because there are certain EAs, certain expert advisors, certain programs or robots you can consider, or AI technology that I use to help me trade better. These are things that I take advantage of by using MetaTrader 5. So, but first, you don't have to download MetaTrader 5 right now. I just want you to download TradingView. I just want you to create an account. So this is TradingView. So TradingView has a lot of features, but what I want you to do is I want you to go to tradingview.com and create an account. Okay. So you just go to tradingview.com, just like that. Okay. And I'm already signed in. They have a sale going on. So you just come here. You can download the free one for now until you feel that you need it, right? Until you feel that you need a higher version. So you'll come here. If you click on products, you'll click chart. and it'll open up a chart for you. So I want you to come to TradingView and start clicking around. You can look at the TradingView walkthrough at the that's in the additional resources section, and you can learn how to use TradingView. But start looking at bringing up TradingView, and I want you to bring this up so that as I'm walking through certain things when it comes to technical analysis, and you have certain homework assignments, you can do your homework assignments using TradingView. When I introduce the Japanese candles, you'll have to come into TradingView and look for Japanese candles. You'll have to do your homework that way. So please take a look at this, and this will be very helpful for you. So last thing is, we'll get to MetaTrader 5 later, but last thing is I want to talk about some language. So you may hear the language bulls and bears. If you're a new trader, I want you to understand that the bulls are the buyers. Those are long, they have long positions. Okay, and the term long position is a buy position. Okay, and the bears are the sellers, those that have short positions. The short position is a selling position. Okay, they're selling. They have an ask price, something that they are asking, they're offering to buyers to buy. So in the course, I'll use the term bulls, I'll use the term bears, I'll use the term buyers, I'll use the term long position, short position. I'll use these terms so that you can get used to hearing them and understanding how they fit within our industry. If you're a beginner trader, some of you are intermediate traders, some of you have been trading, so you know the language. But for those that are beginners, I am this is the language that I'll be using throughout the course. So please drop your comments and questions in the comment section or Discord. Thanks for watching this video. See you in the next one.